Hello friends, welcome back to the channel. So today we are going to talk about a very interesting topic. Uh, as a beginner, whether you should enter in the stock market. If you should, what are the things which you should do, okay, before probably entering or while entering into the stock markets. So most of this conversation or these thoughts are basically coming from my own experience, okay, and I had lost a good money in stock market. I have earned a good money, and I would say initially when I had joined, I did lose a lot, and that is how I learned what are the at least some of the things which you should not do uh, when you enter as a fresher or a newbie into the stock markets. Okay, to start with, let me take you through two quotes which from Warren Buffett. Okay, so first thing is successful investing takes time, discipline, and patience. No matter how great the talent or effort, some things just take time. Okay, so one of the reasons why most of us when we enter fail is because we are just looking to earn a lot of money in a very short time. Okay, and we see stock market as some kind of magic portal which will give us, well, put one rupee to give us 100 rupees back. Okay, and this would not happen in 99% of cases. Okay, second thing, you can't produce a baby in 1 month by getting 9 women pregnant. Okay, everything needs some time. Okay, you might have seen that, okay, hey, this stock has gone from 1 rupee to 100 rupees in last 1 year if I had invested there. Okay, so like I said, that that probability is just 1%, and mostly if we enter into the into some stock thinking, okay, this will go up, again, like I said, 90% plus it will not go up like that. Okay, so it's very rare that we had seen shares going up very quick, and there would be very few percent who would be there for the entire duration, but not everyone. Okay, so we should be very cautious in keeping that expectation that, hey, I am just entering here and I will make a huge lot of profit in a very short span of time. Okay, so it's similar to buying a lottery. Okay, so the chances of winning are basically very less. Okay, and once in a while, see, someone might win also, but that doesn't matter, that you should also go and buy 100 lotteries. Okay, so that being said, let's get into our first question. Okay, should we enter into share market? Okay, and all of you might have different opinions, but overall, I think looking at the current market scenario, other FD rates and everything, I would definitely say yes. Simple answer is yes. All of you should, if you have some money to spare, enter into the stock market. Okay, and these are some of the good reasons which actually prompted me to enter into share markets. So the first thing is FD rates are just going down year on year. Okay, a few years back it was somewhere around 9, 8, then 7, 6. Now it's somewhere around 4, 5. Okay, some societies will give 6, 7, but the deposits will become more and more riskier. Okay, so still, as I think post office and all, if you put some amount, you will get 7%. But overall, it's not like 20-30 years back, right? When you have a good lump sum amount, if you keep in FD, you can easily get a good return every month through which you can sustain. So if you are thinking about your old age, that I will keep some lump sum amount in banks, okay, and through that the FD which I get, I will sustain on a monthly basis, it's not going to happen. Okay, definitely the rates are going to decrease more and more. Okay, then again, stock markets give us a way to make good profits via systematic investments, which could also become a secondary income, right? So you might have one income now. If you do some systematic investment in stock market, you actually would have a second potential source of good income. Okay, third thing is, this doesn't take any I would say any amount to start your journey into stock markets. Just get registered through any broker and just start your journey. Okay, you should just have probably a laptop, mobile, or a computer with internet, and that's it. You can do trading in stock market. Okay, so that being said, so while you decide to enter into stock market, I would say ask yourself these few basic questions to at least understand on how you should play into stock markets. Okay, so first thing is which I did a mistake, right? For example, you say this month you got some 40,000 rupees, okay, which you are thinking you will use after 1 month, say, to pay your school fees, or to repay your loan or something. Okay, so you have just 1 month where you have this 1 lakh rupees extra with you, okay, and you're thinking that okay, this 1 month I will put this money in stock market, and I will make some profit, and after 1 month I will pay this 1 lakh rupees to whoever it's needed. Okay, so if you are a very highly experienced person in stock market, you can do that, but if you are a newbie, that's a strict no. Okay, do not put any money which is needed urgently in a short term, after 1 or 2 months, say. Do not put that money in stock market. There is a high chance you would have to pull that money when it's at loss. Okay, so only thing is, if there is a money you can spare, so think that okay, I have some 20,000 rupees right now, I'm a fresher, I'm going to put this in stock market. Even if that money is lost completely, I would be okay. I will not have any impact in my lifestyle or in my future goals. So you start with that. Okay, second thing is, what are your goals? Are you willing to invest a good 20-30% of your or can you invest 20-30% of your income, okay, on a monthly basis, okay, to earn some systematic investments, okay, or you are looking to earn, say, or save X amount of money after 10 lakhs, after 10 years, 15 years, or are you planning to keep a good lump sum amount, say 5 lakhs or 6 lakhs over next 1 or 2 years, and you want to do probably short-term trades or intraday trades through that, and you're not looking to do any long-term investments in stock market. You're just focusing on this, and you would like this as your main source of income in after some time, right? So based on that, you choose what you need to do. Okay, so for example, if your goal is to earn a sizable amount of lump sum money after 15 years, say, for your child's education, so probably in that case you might just want to not to take any much risk, start some SIP, okay, systematic investing plan, buy a mutual fund, maybe something which is large cap like Axis Blue Chip, okay, mutual fund, buy 2 or 3 mutual funds, right? One could be equity, one could be debit, and then start doing SIP, which might be the safest option, and you will get returns of around at least 12 to 15% over the course of next 15 years. Okay, but if you have right now you have a lump sum amount, okay, and you probably would like to play that on a monthly basis, daily basis, on a short term trades, and just get the profit out of it and use for your spendings. Okay, so in that case, probably your goal should be different, to identify which stocks are having good movements, okay, probably getting into a little bit deeper into the stock market basics, and then start the journey. Okay, so first thing to ask yourself, what is your goal, why you want to get into stock market, is very important. And again, do not keep that I want to get into stock market because I have 3 lakhs rupees with me now, and I have 1 month, I want to increase it to 12 lakhs, that is the reason I'm getting into stock market. Then probably you are wrong, and 99% you probably would end up losing 50 or 60% of that 3 lakhs. Okay, so that being said, I am just collating the mistakes which most of the newbies do when they enter into share market, including myself. Okay, so first thing is, we are all in a hurry to make fast money. Okay, so that being said, we don't do enough homework on understanding very basic concepts. Okay, so for example, when I started, I bought some shares. I saw, okay, 100 shares. Okay, I saw, okay, yeah, the price is up 2 rupees. Let me sell all this. I will make 200 rupees profit in 5 minutes. Okay, I sold it, but when the final statement came, I understood, okay, there is a brokerage there is a tax there, and ultimately I made a loss of 50 rupees. Okay, so understand some of the basics. Okay, if you are into short term, long term, or even if you are doing SIPs, okay, understand how they are going to put your money. Okay, what the tax you have to pay. Okay, what are just let me take an example. Okay, so Adani Power was rising every day 5% recently. I think till a point it had gone to 167. One of my friend bought it for 160, and since that share was in the trade to trade segment, okay, he bought it during the lower circuit, means where the higher circuit of previous day, and as soon as the market opened, it went to upper circuit. Okay, and but the stocks were actually not available in his demat account physically to sell. okay, since it was not an equity segment, okay. And when it came on the next day to his account, the Adani Power started to have lower circuits due to some tweets or some negative news, okay. And then he was not able to sell his shares at all till it probably reached somewhere around 118, okay. And that time he had to actually take a huge loss because he wanted that money also urgently, and he just wanted to pull out of that trade completely, okay. So like this, if we don't have any understanding of how the price is decided, what are the at least some of the basics, okay, which I would say not, it does not take long time. At least if you can spend 1 or 2 hours on understanding some of the things, how it works, it will be very good and very helpful to you when you start the trading, okay. Second thing is we invest in small cap companies, okay, because naturally the price of the share is mostly 50 rupees, 60 rupees, 30 rupees, 20 rupees. And if you see some of the good companies which are growing incrementally every quarter or every year, their shares might have already been in thousands range or 800 or 500 range, right? Like Infosys, okay, where the risk is also very minimal if you are definitely planning to keep it for keep the shares for more than 1 month, okay. Definitely they will mostly at least from the trend what we are seeing now, they will grow, okay. So the risk of losing money is less, okay. So but what we do is since we can buy a lot of shares, if the share is of 30 rupees, okay, we will go ahead and buy a lot of shares, okay. And what will happen is the fluctuation in these companies will be huge, okay. And the value might come down after you bought this large amount of share. And you need to understand, the more the risk, the more the profit, the more the loss, okay. So if you are buying 1000 shares of a company, the price fluctuates by 2 rupees, you are going to lose 2000 rupees, okay. And imagine if you had bought just 100 rupees, if the price fluctuates by 2 rupees, you would have just lost 200 rupees, okay. So there's a huge difference, okay. So that is where people go with the numbers, okay. But again, when you are new, okay, don't go with the numbers, okay. First you try to trade only in the Nifty 50 companies, okay, much safer, okay. And understand the fluctuations. Focus on when we start, what we do is we just buy here, there, from wherever we hear the news, we'll just go and start buying all these companies, okay. So don't do that. Take 1 or 2 companies which you know, which you like, okay, and then understand what are their basics, okay, how the price fluctuates for them specifically during the expiry, right? Sometimes you might have seen that every Thursday the price goes down, the month and Thursday. Don't know what happens, right? So understand there are some patterns, okay. It's not like you can predict. If you can predict, then there is no stock market, right? Everyone make profit. So no one can predict anything, but definitely we can make at least an informed decision, okay, on our trade. So keep tracking at least 1 or 2 companies which you like, and then see how the price is going up and down, okay. Generally you might see that, okay, if the price reaches that limit, there are a lot of people who are selling it and the price will go down. So now you understand, okay, that point is a resistance. So if it reaches there, probably I would sell whatever I have. Then once it goes down, I will buy again, okay. So like this, start with that, be there in that window for 2-3 months, understand what is going on, and then you take more broader scope, okay. So again, the next thing is generally when we start, we hear a lot of news, say, man, this company share is, this is just 2 rupees, 10 rupees, you just buy 1000 shares and in next 1 year this is going to be 1000 rupees, okay. And you will not think anything else, just go ahead and buy that share, okay. So one of my friends also did the same mistake. 2-3 years back, there is one company, Grandma Traders or something, which is no longer there, okay. So there was a news from or the SMS which came, which said buy this is going to go up 50%, 60%. He bought it for 10 rupees, almost invested around 10,000 rupees into that, okay. And after 2 years, after he bought, the share price is actually going up like 11 rupees, 12 rupees. So he thought, okay, that's pretty good, it's definitely going to go up, the news is true. And what happens is after that the price just went down, okay. And probably 2 years back the company itself had gone out, okay, and the share price was around 2 rupees. So practically he lost all his money, okay. So naturally what happens is sometimes brokers also play with us. What they will do is they will put some message, okay, hey, buy this, the price is going to go up, and what they will do is they will start buying the shares of that company. And what happens is the price starts going up. We see, okay, I have seen a message, okay, the price is also going up, the message is right, I will also start buying there. And once we all buy, what happens is they just sell whatever they had, okay, and after that the price just goes down. Okay, so we need to be very careful about, or I would say, do not go by how much true or the good information that is. Do not blindly believe it. Do your own research. Okay, specifically if that information says, hey, buy this and you're going to make a lot of money, you should be very careful about that. Okay, there is no magic or secret like that. Okay, so this is the point which we had already talked, right? Betting on a single share and investing all your money there. So what happens is, again, if I am getting into a stock market, I have 20,000 rupees. It's not ideal for me to invest everything into one single company. Okay, so probably I would select few shares of Infosys which I like, few shares of probably Dabur which I like. Okay, so that my risk is actually less. If something happens to Infosys, at least my money is safe on Dabur company, right? So but what happens is, when we go there, okay, we will hear, okay, hey man, this is going to go up, buy all the shares there. I will invest all my money immediately there. Okay, then I see, okay, man, it's not going up, it's going down. I will be afraid to lose all the money. I will pull everything from there on a loss. Okay, then again I will hear something else, I will put all my money somewhere else there. And another reason for that would be, I would be very frustrated that I had lost some money. I am looking for an immediate way to retrieve that and make some profit. Okay, so in that frustration, I probably will do more mistakes and lose all my money. Okay, so do not do that. Choose at least 2-3 good companies. And again, when you become an experienced trader, then probably you can focus on 2-3 good companies which you have learned the technicals, basics, you have a good trust on that. Even if you want to do a intraday training, you will probably have an understanding of few companies which show a good momentum on a daily basis. Probably you can trade on those. But starting, at least take 2-3 good large cap or good companies which you know, at least from name, right, that you know, okay, hey, I use their products, I use their services, okay, probably I will buy that, and do some kind of technical research, or at least read in news, okay, what the news channels are saying about it. Is there any good news? Do they have any future plans? And then you probably go ahead and buy there. Okay, so next thing, this is probably, I think, at least whoever has started their accounts couple of years back had done this mistake. Okay, we had just gone with, okay, I have my account in ICICI, so probably I will pick ICICI Direct, okay, or whichever comes first in my mind. Okay, my friend has taken this, I will also take that. Okay, so now with more and more, we are using our mobile for everything, right? Practically for trading also you might use a mobile. So the application, okay, the user friendliness of the application, the brokerage they charge actually differs a lot between broker to broker. Okay, so then specifically the new brokers which have come in, like Grow, Zerodha, right, compared to the old brokers, their interface, somehow they had made it much more intuitive for beginners like us to understand and put the trades, right? So what I would say is, at least watch for a couple of YouTube videos, okay, see what other people are saying, compare their brokerages. Okay, there's a huge difference. Okay, believe me, there's a huge difference between these companies. Nowadays, like Zerodha and all, they are just saying that deliveries are free. Okay, they don't charge any brokerage, but there are other brokerages which charge. Okay, that being said, I'm not taking side of any broker here, but that being said, there are other companies which give a very good user interface, okay, so that you can, without doing anything, you will have some level of understanding whether you should buy this or not. For example, in Grow, it actually consolidates the data from some analysis, and if you pick one share, it will show you whether to buy or not. Okay, what is their recommendation? Okay, which is pretty good. Okay, so next thing is getting into futures and options trading. Okay, so again, I have seen people who just have entered into share market. They have not done properly not actually done much trades on shares. Okay, they might have got some initial success, and since futures and options are a way to invest, I would say 1/5 of the actual amount you would like to buy those shares, okay, and buy a huge lot. Okay, for example, just an example, right? If you feel that Tata Steel might go up to 100 rupees in next month. Okay, and so right now immediately you can go and buy a lot of Tata Steel shares. Okay, for example, if you actually buy the shares, the cost might be 1,400 rupees right now. So for 100 shares you would have to pay 1,400 into 100. Okay, which is a huge amount. Okay, but if you are going to buy a call based on your understanding, okay, the price is going to go up and there would be a margin, say it's 100 rupees, so you're just and the lot is say 850, you are just paying 850 into 100. Okay, that means 85,000 rupees for 850 shares right now. Okay, and if the price goes say if the price goes 2 rupees up, you are going to get 850 into 2. Okay, that is the amount you're going to get as profit. But in case of shares, for 850 you have to spend a huge amount, 850 into 1,400, which will be in 11-12 lakhs, right? And 2 rupees it goes up, you probably will get the same profit. Okay, so to make this huge profit, people will go and buy futures and options, but understand, like I said, as risk increases, the risk of getting huge profit at the same time huge loss also increases, and mostly, like it happens, we might end up making loss than profit. Okay, so don't get into futures and options F&O trading unless you understand what it is very clearly, you understand which stock, underlying stock you are trading. Okay, how is it likely to the price is going to increase, decrease. Okay, what are the what is open interest. Okay, how can you interpret that, what are the price action movements, how you can interpret that, then only you go and do this F&O trading. Okay, the last thing probably I would say is especially when I had started it, I did invest, bought this. Okay, then I was seeing that, okay, that's going down, I was afraid. Okay, I sold this, then I bought something else, and finally I did a lot of trades. Then brokerages come on that, tax come on that, this, that, and finally I actually had lost a lot of money. But I was not very clear, okay, how much I had actually invested, because say this month I had put some amount, next month also I had put some amount, in between I had put some amount. Okay, and I was not very clear, okay, how much I lost, which trades did I lose. Okay, so there is no proper learning also for me from that. Okay, so when you start, make a sheet or a document, write what did you buy, how much the brokerage was charged. So next time when you do a trade, you have an understanding. Okay, if the margin is 2 rupees, I sell it, I probably not make any profit because of brokerage and tax. Probably I need to look for a margin of 4 rupees, right? How many trades I did were wrong. Okay, what can I learn from them? How much money I have lost at any point of time, or how much money I have gained at any point of time. You will have a proper tracking and a good learning if you put a very good method or a way to systematically track what you are doing. Okay, now talking about all these mistakes, probably I had already covered a lot of things what we should do to have a good or positive start. So first thing is, at least, like I said, know the basics, how things work, right? When you buy something, understand what you are buying. When you sell something, understand what would the charges overall would be taken, right? Understand what is the if you're buying a share of this specific company, okay, what does that company do at least, right? What was its future performance, right? Is there any good future plans? Are you hearing any negative news about this company? At least do some 5-10 minutes of Google, and then you go ahead with that. Okay, stick to, I would say again, I am saying this, stick to Nifty 50 companies when you start for at least couple of months. Okay, then choose the right broker. I think we have already covered this. Then select your style, right? Again, I had covered this. So what is your goal, right? Are you looking to make profit on a monthly basis and use that profit to do some monthly expenditures, and you have some lump sum amount with you to play, right? Or are you looking to do systematic investments every month, 5,000? Okay, so if that is the case, probably you have to choose wisely on some shares or some SIPs, and just without doing any trading, just have to keep buying that, right? Or putting some amount and keep buying that for long term, right? And again, even if those are for long term, when you see that you have got a good profit, you can probably pull that amount out, and then when it corrects, you can again buy it, right? Again, last thing, sorry, not the last thing, take it slowly. Okay, so what happens is, when we invest, okay, when we make a loss, we become very much frustrated, okay, because we are emotionally attached with this amount, right? And if you buy something and you lose that amount, right? For example, you go to a big restaurant, you spend 5,000 rupees, probably will be happy because you get something in return, right? But when I have seen people, they put 5,000 rupees in trading, they lose it, they will become very much frustrated. Okay, hey, I lost a lot of amount. Okay, the amount, just something which I had just lost without doing anything, and they will be emotionally frustrated. And what they will do is they will do some quick trades after that to get that losses back, right? And what will happen is they will even lose more money, and then they will say, okay, I'm not going to share market again, I'll just pull out, right? There are a lot of cases like this, so take it slowly. Okay, you understand, first of all, see, if any trade you're going to take, it doesn't matter. Okay, you might have a better understanding when you start understanding things, that okay, this might go to a positive direction, negative direction, but again, no one can predict anything here. Okay, forget about, there will be a lot of people who would say you can see this action, you can do that, you can watch this average, you can see these bands, bonds, everything, right? So you can refer to this graph, that graph. So things might work out, and that might give you a direction of what you can do next. Okay, or give you basically, okay, where you have to pull out some direction, but none of them can predict 100% that this trade is going in this direction. Okay, so understand, any trade you're going to take, specifically as a newbie, there is just 50% chance of it being successful, 50% chance of it being a failure. Okay, so in any case, be ready for that, both mentally and again, like I said, imagine that money which you, as a newbie, if you are there, you are putting some 20,000 rupees. Imagine that as a fees to learn this. Okay, think that money is gone. You come with that that mind, and in case you get profit initially, that's very good, right? You can actually enjoy with that. Okay, so next point I think we have covered. Okay, and the last thing, which is again very much related. So this is one thing which newbies generally do not do very efficiently. So understand that stop loss is very important. Okay, so, and you have to pull out at the right time. So for example, if I'm a newbie, I at least I'm not going into the basics of graphs, but keep your stop loss, and you can decide the stop loss based on where did for example, say I'm going to I have bought a share of Infosys at 1,500 lot. Okay, and I am just thinking that it will go at 1,505, and I will sell it at that point of time. So 5 into 100, 500 rupees is my profit. Okay, so now I should definitely keep a stop loss also. What happens if it goes below 1,498? Okay, and this stop loss could be something which I understand from the previous points. Okay, where after it had gone down from that point, or probably it would have faced some resistance there. So again, whichever method you're going to choose, that's on you, but make sure that you keep a stop loss. Okay, and again, your stop loss is say 10 rupees down and your profit is 2 rupees up. That is not a good trade. Your stop loss should be 2-3 rupees down, and profit should be at least 2 or 3 times of that, right? That is when it's a good trade, again, if you are doing for a short term. But if for long term, if that's a good company, your stop loss definitely can be much lower. Okay, because definitely it will go on a long term on a positive direction only. Okay, so keep a stop loss, specifically if you are a intraday or a short term trader as a beginner. Keep a stop loss and make sure that it at any cost. Okay, sometimes what happens is when we hit that stop loss, we think, okay, it might still pull up. Okay, so let me wait for some more time. Do not do that. Okay, be prepared emotionally. Okay, if it hits there, I'm quickly going to pull out of that trade. Doesn't matter anything else. Okay, then you analyze what happened in that trade. Okay, so see, once again, thank you for being with me and listening through my experience. So one other thing which I want to say is the very easiest, there's just one other tip what I'm giving, which I had learned. Okay, the most easiest thing to understand is or to do is momentum trading. Okay, you might see trade started today, the entire atmosphere is positive. Okay, you're hearing all good. Okay, things are just going up and up. Okay, and you're seeing a good momentum that, okay, hey, this has gone 5 rupees up, 1 rupees down, 4 rupees up, 1 rupees down. Okay, that is a momentum. You buy there immediately, and do not wait for it to go up like 15-20 points. Once you get specifically at the beginning, right, once you get 2, 3, 4 or 5 rupees or points up, you sell it, you get your profit and come out. okay, then you understand the pattern, what is happening. But that is the most important pattern. And again, if you are doing intraday, what I would recommend is start with selling first and buying later, okay, because when it starts to go down, okay, 90% will go down, because that means, you know, negative news or something, and people generally take these things more seriously than taking positive things, right? So something negative comes in, even if that is a right or wrong, people will just immediately start selling it, okay. But if a positive news comes in, people are a little bit, okay, should I buy, should I not buy? They will think again and again, then only they will buy, right? So start with this. So at least some of the things which work for me, okay. So that being said, I hope all of you had enjoyed this or got at least some information from my experience. So if you like this, please feel to subscribe this channel and click on the notification button. I will definitely come back with more of such examples from my experiences of my trades, and would definitely keep this channel alive. So thank you folks, be safe, and we'll catch up again.